their sales, not necessarily revenue. And I know you don't necessarily break out the actual earnings themselves, but were you comfortable with actually what you made on those sales?
More than comfortable. Very strong across the performance. We're a private company, so we only disclose the public top line. But yes, very strong performance throughout the business.
The conversation today a lot brighter than maybe what it was a year ago when we were, talking about downgrades and restructuring and all that. Is all that kind of behind you right now with regards to the changes that you want to make to sort of get Sotheby's back on track?
Oh, absolutely. I mean, things, for us, the markets have changed dramatically. That started about a year ago. In addition, we raised $1 billion of primary capital. That's going back about 18 months, including primarily from one of the Abu Dhabi sovereign wealth funds. It's been a game changer on our balance sheet from a capital perspective. Coupled with this incredible performance, it's been an exciting last 12 months.
And I'd love to, break down that first half figure that you have here. Where are you seeing the most strength when you think about, the areas that you're seeing demand, both, in what you're actually selling and then the type of sales that are being executed?
One of the things that's been interesting to observe is just how broad-based the results are. It is, I'd say, fine art, which is our largest kind of category overall, is where the most growth has been year over year. But if you look at it geographically, we've had bidding from 120 countries in the first half of the year. Asia returning to strong performance. The Middle East, notwithstanding conflict in the region, performing very well. And of course, the U.S. been very strong with the market performance and all the wealth formation here. And it's in fine art, but also what we call luxury, which includes everything from cars to jewelry to watches. I don't know if you're going to ask me about it, but we sold a special friend this morning.
Do you consider T-Rexes as luxury? What sort of bucket do you categorize them as?
Well, everything old is new again, as they say. And so this, in this 250 anniversary year of the United States, it seemed only appropriate to sell one of the original Americans, perhaps, 67 million years old, hailing from South Dakota. We called him Gus Rex.
Love it.
And he sold for $50.1 million this morning.
Congratulations, by the way. I don't know where Gus is going to go, but congratulations to that winner, which I assume you won't disclose to us, right?
Nope.
I do want to talk about just on the finance side before we get to some of the other interesting auctions that you've had. And this really has to do with the securitization side of the business, Sotheby's Financial, and exactly what you want that to be. Is that going to become a bigger part of the business? Do you anticipate it could be becoming even bigger than the auction house itself?
We have 4 divisions within Sotheby's. One is focused on fine art, one is focused on luxury, one is focused on financial services, which is where we did the securitization transaction. And then lastly, something we call Sotheby's Partners, which is all of our experiences and partnerships, which is a growing part of our business too. Sotheby's Financial Services, we're the largest non-bank lender in the art world. It makes a lot of sense given how much knowledge we have about the value of fine art and other high-value collectibles. So it has been a significantly growing part of the business over the last 6-7 years, dramatically so. And so the securitization, which was $900 million, was just a way to get the wholesale funding side of that business to be market-based beyond, the bank syndicate that we have, who provides the other part of that wholesale funding.
With regards to the auction house and some of the auctions you have done, I am curious just about the structure of some of the deals and the idea. Are you seeing buyers maybe ask for a little bit more on the concession side, whether it's on the top off the commission or maybe whatever I guess concierge might be involved with regards to some of those sales?
Right. We don't give any discounts per se on the commissions to buyers. We have a fixed buyer commission. That's one of the things that I think is an important principle of auctions, of being a level playing field, I guess, as you might say. And actually, our demand levels are at all-time highs. Whether that's our sell-through rate, our hammer price versus the low estimate ratio, or the number of bidders per lot, which is close to 5 bidders per lot on average right now. So all 3 of those heuristics are at or very close to all-time highs for us. So that's been the buyer demand, and what the effect that's had on our market is it's actually brought out higher quality things from sellers, who people choosing to sell in this very strong buyer demand market. So, that's really what's driven the performance.
I want to talk a little bit more about geography too, because you mentioned that you are seeing those Middle Eastern buyers still present despite what's going on over there geopolitically. That you're also seeing Asian buyers come back, which is particularly interesting because you think about the Asian market, and it's been soft for quite some time there. So I was wondering if you could expand on that a little bit. When you say Asia's coming back, to what degree?
Well, Asia's been a significant percentage of our new bidders this year, and that's been a trend for a long time, in our business, just because it's such a large region, growing region. And of course, you can talk about China and Greater China as a key player in that, and we're definitely seeing more bidding coming, from China, more participation. Our Hong Kong sales have been strong this year. Just as an example, we had the largest watch sale that we've ever held anywhere in Hong Kong a few months ago. So that was an encouraging sign. Those are global bidders, of course, but a lot from Asia. But it's not just Greater China. That's what's interesting, I think, especially if you include South Asia and India, Southeast Asia, whether that's, Thailand or Singapore, Malaysia, other countries in that region, Korea, Japan. I mean, it's pretty broad-based, the uptick in level of engagement right now.
So broad-based strength in Asia. Let's talk to you a little bit about demographics, because something we talk about all the time is this incoming wealth transfer. You think about a lot of this wealth changing hands from older generations to younger investors and younger consumers of art. And I wonder, how you're approaching that at Sotheby's and what trends you're starting to see emerge among that younger subset.
Sure. Well, needless to say, it's almost a truism. It is a truism. Taste is constantly changing and evolving, and it's always going to be different a year from now from where it is today. The key is to bring to market, the right things, the right time to meet that demand and meet that taste. The great wealth transfer, the generational wealth transfer that you referred, is very, very evident in our business. We see it in the number of single owner collections that are coming to market that are well over 100, 200, 300 million dollars. These are collections that nothing of this size had ever even come to market, less than 10 years ago, really. Yeah. So we're seeing that, week in and week out. But I do think that, what younger people are looking for, the rise of categories like natural science and history, the rise of game-worn sports collectibles. We sold Brunson's Game 1 Knicks jersey last week for $1 million.
I saw that.
We've got Pele's 1958, game-worn final jersey.
Please, it was a little out of my price range.
Please do.
But I am curious, though, too, about the balance between something newer like this in terms of the sports memorabilia versus traditional art. And, part of your performance, there were some mega art sales. The Lewis collection, Mnuchin, Pritzker, a couple others I'm probably forgetting, Lauder. Was in there as well. And not to be glib about it, but when you start to see those types of collections, more traditional collections come to market, is there conflict between what the younger people are looking for when it comes to, say, a watch or a sports memorabilia and things like that?
One of the interesting things is actually in the art market even, there's been a trend towards blue chip fine art, less speculative things, more established, let's say, and that pushes you further back into the past, and that may be leading you into Impressionist or the modern time period, pre-war. It may lead you into the 60s and Warhol and or into the 80s with Basquiat and others, and so. We are seeing a greater interest, a little further back with a little bit less heat in the recently produced things. That's true in art. It's also true in luxury categories, whether that's watches or cars or jewelry. Right. There's been a little bit of, whether you want to call it a flight to quality or a flight to.
Is that the idea that
perception.
those types of items have kind of stood the test of time in terms of perception?
So. I think so. And we're seeing that across age groups and across geographies and across categories. So
but how do you know when to make that switch, right? Because at some point, the stuff that's getting produced in the 2000s will become, at some point, the new.
By the way, it's a two-sided market. These may be great buying opportunities. To the extent some of those things were overheated, these things tend to go in cycles, and these can be actually very interesting entry points for collectors who have an interest but felt priced out, and you see things, recalibrate, and that's an exciting entry point. So, we'll see some of that too. It's one of the things that keeps, our business constantly interesting, and honestly, auctions, we're in business for 282 years. Auctions are a barometer of taste. They're a barometer of value and things that can be hard to value. Yeah. And it's constantly evolving.